Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so we're going to go over this graph that was on social media today. When you see the graph, you might say, oh, I remember seeing that. And it was really sort of blowing up. It was blowing up on X/Twitter, on Facebook, and there's some interesting debates about the graph. The problem, we're going to show you the graph in a second. The problem is the graph is extremely misleading because it is intentionally made visually to be misleading. And we're going to, at some point, we're going to show you the graph, and then we're going to let you try to figure out why it's misleading. And if you could figure out for anybody else, why don't you put it in the comments?
Okay, sounds good.
We're going to get there. But before we get started, we want to give a shout out to our sponsor of today's video, Chico's Bail Bonds. Let freedom ring.
Oh my God. Okay, so no, we don't have a sponsor, but
Chico's Bail Bonds.
But if you know what Todd is talking about, please put that in the comments, and you can enlighten everybody else who doesn't know about Chico's Bail Bonds.
Just to be honest, first of all, if you don't know the reference, I'll give you a hint. It is from a movie.
A lot of things that we talk about are from movies, yes.
The other thing is, if you're super young, you may not get it, like Juana. But also, Juana was not in this country when the movie came out. That's another hint to maybe the time frame. Chico's Bail Bonds. If you know the reference to Chico's Bail Bonds, it's a completely fictional company. Put it in the comments.
There we go.
We want to hear. Okay.
Let's get the good stuff.
Okay, so this is what we're going to do. I'm going to first put up the chart. So here's the chart. Mm-hmm. Now, we've got ourselves here in a little box and a kind of a blank area of the chart, hoping that doesn't skew your perception. But as you can see this chart, now what this is on the far left side, it is the income, home value versus median income. So you have dollars going up and down, and then on the left to right, you have a timeline. And then you have home prices and then income. And as you can see, the home price graph is substantially, it's just vertical, it's taken off. But income is not really doing that much. Apparently not very doing that much, right? But here's the thing. This graph is visually super deceptive, because what if I told you there's almost no difference in the difference? And we're going to show it to you. We're actually going to show you the difference, that there's not much of a difference, okay? But I want you to kind of look at the chart and figure out like why. When I look at the chart, Todd, because one, and let's talk about this, is super important before we go into detail. People have this desire to get as much information with as little work, which is why people read a headline, comment on an article, that never read the article. Why is that? Why do people do that?
People are lazy.
People are lazy. Actually, who just said that people were lazy? The CEO of Frontier.
Well, then
He said the reason...
I thought I was smart until you compared me to the CEO of Frontier, but okay.
He said the reason their Frontier Airlines doing poorly is because people are lazy and they haven't gone back to work. And then he says that they have to hire so many extra employees now because their existing employees are lazy, and they need more employees per plane than they did before the pandemic. That literally, he said that in a news article. Okay, so people are lazy.
Right.
But what's the deal here? Because like I said, when you look at this chart, I guarantee you, maybe some of the people out there saw this chart and shared it, and they drew a bunch of inferences based on this chart.
Right, so people are going to just look at the pretty colors of the lines, and they're not actually going to read the data. And the data isn't that hard to read, right? Because you can see what the numbers actually say. So for example, draw a comparison between the ratio of income to home prices. So if you calculate that, so how many times income? So is it 4 times? Is it 5 times? So if you made $10,000 a year, were homes $40,000? Were homes $50,000? How much were homes, right? If you make $50,000, how much are homes? Are they 200,000, 250, 300? How much are homes? So, and that's what I mean, because over time, you're going to see that this chart is visually deceptive, but if you look at the actual numbers, they paint a different picture.
Okay.
The other thing to keep in mind, sorry.
No, go ahead.
The other thing
they're still looking at the chart, trying to figure out what because they're like, you guys are bullshit. And then when we show you, you're going to be like, Oh my God.
Okay, the other thing to keep in mind is that over time, homes have become more valuable. What do I mean by that? Okay, so if you bought a home in 1950, that home was probably cinder block construction.
Okay.
That home probably certainly did not have overhead lighting, may not even have had power in all the rooms, didn't have phones in all the rooms.
How big was it? Probably?
It was probably fairly small. It was probably somewhere between 900 square feet and maybe 1,100 square feet.
How many bedrooms and bathrooms?
Probably had 2 or 3 bedrooms, probably only had 1 bathroom. Maybe
What about central air and heat? Did it have that?
even if it had 4 bedrooms, it still only had 1 bathroom.
Okay.
It didn't have central air. It didn't have central heat. It didn't have insulation. There were a lot of things this home didn't have. Look, these homes were basically just 4 walls and a roof and good luck. Okay? So there was a lot of that. As we progressed with homes, homes started to get better and better. Homes didn't get exponentially better probably until the 1970s.
Okay.
The 1970s, homes got bigger and homes got better.
You can see that on the chart, how homes are getting improving.
Right. So by the 1970s, now homes have insulation. Now homes have electricity in all the rooms. Now homes have multiple bathrooms. So they're getting better. But homes are still not quite there yet, right? Because not everybody has air conditioning. Homes are painted with lead-based paint. Now, why is that important? Well, lead-based paint is very important because it is actually really good paint. And what I mean by that is that they were using this paint because it was easy to use. It had vibrant colors, and the thing that it did though is it peeled.
Oh my God.
And it peeled really bad, and what happened was kids like me would actually eat the paint chips. And it, of course, this is lead, and imagine how much smarter I'd be if I hadn't eaten that lead-based paint, right?
Right.
So there were problems with that. So as we progress into the 80s, now more homes have air conditioning. Now homes have phone jacks, more than one in the house.
What about sub-zero fridges? Did they have those in the 50s?
They didn't have those.
Are you sure? What about 12-foot vaulted ceilings?
Didn't have those. Okay. So, better insulation and that sort of thing. We get into the 90s. Again, homes are getting better. Until we get to like the 2000s when, now we've got post-tension slabs. We've got all kinds of improvements. We might have speakers in the walls. We might have all kinds of other improvements to houses. So homes have improved. And when you look at that improvement does not come free, right? I mean, it costs money.
Okay.
All of that costs money. It costs money in the development. It costs money in the construction. It costs money in material. It costs money in expertise to install everything. All of that costs money. And you see the progression of home prices going up. You also see the progression of income going up. And again, I'm starting back to the 70s again. And the reason for that is because we had what in the 70s?
Oh, it was a mess in the 70s. We had wars, there was energy crisis, we had recessions, and then you can see in the late 70s inflation taking over.
Right, and then in the 80s, inflation really went to town.
And this chart shows that.
Right.
And then you can see the housing crash.
Right.
On the chart.
So you kind of see all these things kind of happen throughout time. So the reason I'm pointing all this out is because you need to understand part of what has driven homes' values, and you need to understand part of what has driven wages, right?
Okay. Well, we're going to get into that discussion.
Okay.
But I'm going to ask you a question.
Yes.
Have you, not you, all of them.
Sorry.
Have you figured out what is deceiving about this chart? And I want you to do something for me. Look at the chart. Look all the way at the left and all the way at the right. What if I told you that the ratio of median home prices to income was exactly the same as today? You would look at the chart and go, Todd, there's no way. I visually am seeing this chart. It's substantially different. Like, look at that big gap between the numbers, and then there's almost no gap, and then, yada, 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 right? So let's do this. We're going to play a little game. Okay, Juana's going to be my mathematician.
Oh, you're in trouble now.
Okay, I'm going to make Juana do math in public. We're going to zoom in on the far left part of this chart, all the way in that little corner. Okay, can you see how thick those lines are? They're super thick, right? So they're kind of covering up the distance, the gap between wages. Plus, they're so thick, it makes wages look like they're like super low. And when you look at the whole thing, it looks like a mess. But there's some little numbers there with dollar signs. When a dollar sign has a number next to it, what does that mean?
Money, money, money.
Money. Okay.
Ka-ching.
So this chart looks like it starts in 53, 54. And it shows the median income was $4,000. And the median house was 18 grand. So Juana, doing some quick math in public, what is 18,000 divided by 4,000?
4.5.
Okay.
I can do math.
You could do the math. 4,000 times 4 is 16, and then 2,000 more, which is half, is 18, right?
Right.
And actually, now what we're going to do, right? You guys got that, 4.5. Now remember, this was a 1953 house that Juana talked about, right? Mm-hmm. This little bitty house, cinder block walls, maybe some electricity part of the house, not the whole thing. Mm-hmm. Certainly not, 8-foot ceilings,
right?
One bathroom, right? Okay. Juana, now this is their chart, not my chart, with their numbers. That massive gap there with those little skinny lines, so there's this huge space. It says median income is 78,000.
Okay.
And then it says the home price is 350K. Juana, what's 350K divided by 78,000?
350. No, it goes the other way. But anyway.
No. 350? No, it's 350 divided by 78. What's the number? I'll give you a hint. You just said it.
Yeah, it's 4.5, but I was thinking about it the other way.
Oh, the other way. It's fine.
Yes.
Okay. Guys, you could do the math on your calculator.
Yeah. So
it hasn't changed. Home prices today, even after this massive run-up that they showed, are 4.5 times income, what they were in the 50s and 60s.
Okay, so think of it this way. We're talking about ratios here, right?
Okay.
This is what we're talking about. We're talking about ratios. So it didn't matter how much money you made so long as the home was 4.5 times your wages. So today, the median is still 4.5 times wages. So that really hasn't changed. But what has changed is other things. So can I talk about other things?
Yeah, talk about other things.
Okay, so other things. So simple things like, how many of you have been to Dollar Tree, right? The dollar store, which used to be $1, but now it's $1.25. You can get a calculator for $1.25, right? Now that calculator, 1953, was so much more money proportionately than it is today. If you lived in Chicago and you wanted oranges or avocados or some exotic thing that that didn't grow locally, it was so much more expensive than it is at your grocery store today, because the only way you could get it was if you flew it in, because the refrigerated trucks weren't what they are today, and transportation wasn't what it is today. So everything like that was more expensive. So food was more expensive, relatively speaking.
Yep.
Goods, like I said, like I gave the example of the calculator, that was more expensive, relatively speaking. There were so many things that were much more expensive. So let me give you another example. Do you remember maybe if you have grandparents from the that were adults in the 1950s, they would mend clothes. Oh my gosh, do we mend clothes today? Of course not. We toss them and we get something new. Why? Because clothes are really inexpensive compared to what they were back then. So we kept things back then. We repaired things back then. We repaired radios. We repaired TVs. You guys don't repair TVs. You just go down to Costco and get one for less money that is better than the one that you're tossing out.
In the 70s, we had these ads for the Maytag TV repairman, mm-hmm. or the Maytag repairman, and he would repair any Maytag appliance, mm-hmm. whether it was a TV or a washing machine or whatever. And the joke was, the commercial was, he's really lonely because he just sits there, bored. Mm-hmm. And it's because their electronic product was so reliable. The Maytag repairman, and it was somebody like Jonathan Winters or somebody like that, right? Okay, this is why Juan is pointing this out. you have probably seen these comparisons to where they go, oh, but homes, look how much homes are compared to income. And then they compare income to all these ridiculous things that were much more expensive relatively,
yes,
for all the things one is saying, like fast food. You know what? Fast food wasn't, they didn't have a production line where they just, patties showed up frozen in your thing and a robot made them and they were much cheaper. A lot of goods cost a lot more. So you can't take the cost of a TV set and then try to compare that to income and then compare that to a house today, right? Because a house has been more stable with respect to income than a television or an airline ticket. I mean, an airline ticket used to be like, a month's income.
So, okay, give you perspective. Think about it. You've seen pictures, right? In the 1950s and 60s, people are wearing their Sunday best to go fly, to go travel. What do people travel like now? Yoga pants, slippers, pajamas. There's, it has become very affordable. Everybody can afford to fly. It's a whole different world in that way. So many more things. The price has actually gone down versus income than up. So the only thing that's really kind of, if you will, kept up with income is housing. Everything else, for the most part, has actually gone down, has become much more affordable, much more accessible to more people.
Because you can mass produce yoga pants and you can mass produce electronics. Think about if you ever bought a high definition TV when they first came out. They were $3,000 and you can go in Costco for like $250 and buy a higher quality high definition television than you could bought in 2005 when they came out for $3,000. Much higher quality because of economies of scale and things like that.
But the TVs are a perfect example actually, because you can get like a 50-inch really good TV for a couple $100 at Costco, and that same TV 18 months ago was $1,000.
Yeah. Here's another thing I want to show about this chart. There were times, as you can see, where housing has struggled because of the economy. And the biggest one that's most noticeable is the Great Financial Crisis, which was the housing crash caused a Great Financial Crisis. Now, if you look back at where it says 161K, the bottom of that thing, incomes then were like 54,000. Buying a house for 3 times your income was historically very low. Almost nowhere on this chart could you get a house for 3 times your income, right? 54 times 3 is 162, and it says 161. So it's just under 3 times your income. A lot of people took advantage of this, paid cash, bought houses, got super cheap loans. And we are now back to where we were in the 50s. And when you see these memes on Facebook where they go, oh my God, I would love to go back to the 1950s where a house was $19,000. No, you wouldn't. It's still 4.5 times your income. And it's not going to be the quality of home you would buy today. A $350,000 home is going to be way, way nicer. It's going to have a lot of amenities. It's going to be much larger than the little pillbox houses in the 50s. I know because I grew up in those damn houses. The first house we lived in, we didn't have central AC. We did have a heater, but it wasn't central heater. We had the wall heaters. And then we moved to San Diego and we had the same thing. We didn't have wall heater in San Diego. We had no central AC and no even wall heater. Some of the houses had wall heaters. Lived in a house in Texas that had nothing. We just had to plug in like heaters and fans throughout the house to keep it cool. And it wasn't until we moved to Vegas in 1975, we had a house with central heating and central air. 1975. And it was a brand new construction house in Las Vegas, and it was massive. It was like 1,400 square feet, 4-bedroom house with 2 bathrooms. 4 bedrooms, 2 baths, 1,400 square feet. Still doesn't even compare to a median home today. A 4-bedroom, 2-bath today is probably be at least 2,000 square feet, and it's going to have far more efficient and better things than a house built in 1975 had, right?
Right, and today, if it is a 4-bedroom house, it's got 3 bathrooms at least.
Yeah. Okay. Certainly interest rates are higher than they were in the 50s. They're a lot lower than they were. And a lot of this home price chart has to do with, if you take out the housing crash, variability in interest rates. But this trend, unless incomes start dropping, home prices are not going to drop. They're not going to. And if they do, they will just be in disequilibrium, and there will be pressure to revert to the mean.
So I don't see home prices dropping outside of some crazy thing happening, simply because every day we have more household formations, and we don't have enough homes being built to accommodate the number of household formations, right? So that really speaks to, like you said, an imbalance between the available housing stock and the demand for housing, which is pushing people, of course, into apartments and that sort of thing. And that's fine as long as somebody has, as long as everybody has somewhere to live. But people's, I think, ultimate goal is to own a home of their own and not be paying rent in an apartment.
The reason why we did this video is we wanted to show you how being, by intentionally making a chart a certain way to make it appear that a thing is happening, or to scale it, or to be selective about what years you pick or whatever, and not take everything into account, is highly misleading, because a lot of people would not have guessed that a value of a house in the 50s, a median home, is the same today relative to income.
Right.
And almost nobody would even dare to compare what a home today is versus a home in the 50s.
So next time you see a chart, look at the numbers. Don't worry so much about the lines, but look at the numbers and make sense of the data in that way. Don't let them pull the wool over your eyes and have you draw an inaccurate conclusion. Do a little bit of digging. Just take an extra moment, look at the numbers so that you can make sense of it and draw a correct conclusion.
Oh, there's one more thing about this chart I want to point out.
Okay.
I swear to God, this is a true story. When I was in grad school getting my master's degree, one of my professors, it might have been an economics professor, we did this exercise where he showed us all these charts and asked us to make inferences about the charts. And then what he did is he pointed out stuff like this. The other thing they do in this chart is they make sure it physically takes up the whole screen so that it looks like it goes from 0 to 100. Like it's the most it could ever be. And back then it was the least it could ever be. Like they intentionally have scaled everything to be this way, not just the width of the lines, but how they do it. A lot of times what they'll do if they're trying to make a different point is they won't start at 0. They'll start higher up the chart so you don't look at the totality. They try to get you to think, oh, that's 0. But if you don't look all the way over and see the actual numbers, you won't realize, oh, wait, this starts at 2000. Why are we 2000 number of whatever's not 0? So if it goes from 2000 to 3000, if you look at a chart from 0, it doesn't look like that much. But if I take out the 0, then all of a sudden it's a big tilt and it looks like it goes up at a higher rate, even though it doesn't.
Right.
Okay. I just wanted to point that out. No kidding. That's something that's talked about in graduate business school, like how to use charts to do this stuff.
So people are trying to influence you. They're trying to get you to click. So if you do click, make sure that you look at the data and you draw your own conclusion and don't allow yourself to be manipulated. Okay.
And if you find yourself in a bind, remember, Chico's bail bonds. Let freedom ring. Okay. Chico will get you out of any bind.
All right. So, Todd has Chico on the brain, so you have to put something in the comments about Chico. Okay, please do. What did you think of the chart? Did our explanation make sense? What's your sentiment about the whole thing? We want to hear from you. Please leave us comments. You don't have to agree with us. Please remember to like the video, subscribe, hit the notification bell, share the video. This is a cool video to share, actually, because, this thing has been blowing up on X, so it might be kind of fun to share with some people. If you haven't subscribed already, please do. Like the video, and we will see you on the next video. Bye.
Bye.